Developing news here, sort of the market plunge we saw on the Dow Jones. Joining us right now is David Swanson of Swanson Financial to talk about how this might affect your money. So the basic question here is, what happened and who should be worried?
Well, Lincoln, it really depends on what your age is, all right? So if you're younger and you're exposed to equities, you're probably going to be okay because you'll have a long enough time to recoup. And actually, this is an advantage for you because you get to buy equities at a lower value, all right? If you're closer to retirement, you could be in real trouble because this is the savings that you have going forward. And we counsel people all the time, and unfortunately, we see a lot of people that come in that have all of their money in the stock market. And if you're near retirement, this could be a real problem.
So what would you say to those people who may be watching this panicking a little bit right now?
Well, what I would say is that what you have is what you have, and you need to have a plan that makes sure that you can be successful and comfortable in retirement. And if having too much of your money in growth is going to be causing you not to be able to sleep, is going to cause health problems because you're too stressed out about it, you need to figure out how to get yourself in a position where you take less risk. And unfortunately, no one sees volatility or risk as when the market goes up. It's only a problem when it goes down.
So let me ask you about this. I saw a lot of punditry on TV today. We have come so high, so fast, that this drop didn't do so much, according to some people. Is that true in some ways?
Well, you hit it right on the head, is that we have moved up in such an accelerated manner that we're really only back to early December in the indexes. But when it comes so quickly, people get very, very concerned. And is this an opportunity, or is this the beginning of a shift of assets from the stock market into the bond market? And when that occurs, it's going to be a real problem. Now, a lot of the indexes, we're looking, kind of comparing this between 2008 and today. We all were alive during that time period. It was a big retrenchment, almost 40% in the market. But we're more like around 2011, 2015 markets. So it's not to the level of it was 10 years ago, but we've had a pretty good stock market between now and then, and you have to expect some correction.
Can you make a case for anyone who wants to sell why they should stay in the market or buy?
I would think that if you are concerned about your investments, you shouldn't be in them. One measure that we use is you say, okay, if I have so many of my dollars in stocks, and if I had that much money right now, would I invest that same amount of money in the same investments they're in right now? And your answer is yes, you're probably in good shape. But if it is, oh my God, I would never do that, I just don't know what to do, you really need to rethink your whole philosophy about that and find somebody to help and guide you into an area that can get you into more secure investments.
And people might be comforted, well, I don't know, depending on what you thought. What were your initial reactions as you saw the news today?
Well, I think that everything needs to be planned in advance. You need to have a written plan, and it needs to be focusing on really the worst things that can happen in the environment. And if you are ahead and prepared for this, these kind of marks to get down in the market don't really affect. I had one phone call today, one person that was worried because we already knew that your money was safe and secure and they were going to have income for the rest of their life. So we just shift money from taking it out of the stock market to taking it out of their safe accounts, and we let the stock market portion move forward.
David Swanson, thank you so much from Swanson Financial. We appreciate your time today.
Thank you.